Sarah, when do you make the trade? When do you move out of the momentum story that is tech, that is in so many ways a defensive play, and start to believe in economic recovery and switch into the cyclicals?
I think this goes back to the earlier part of our conversation, which is how has COVID-19 changed the world? And to the extent that we still don't have what any of us would consider a sort of normal day-to-day life right now, I think that it's hard to say that the tech story is going to be over and the cyclicals are going to win. I think it's less a question of moving out of one and into the other than saying, okay, maybe I'm not going to add to tech, but maybe I need to start looking at some of the other sectors. Unfortunately, for the cyclical sector, those stocks have moved quite dramatically already on the back of what people were looking at for a V recovery. And if things slow down again, which I'm a little concerned that they might, especially even on the tech side, where you think about for the first few months, everybody had to get new computer equipment and new everything to be at home. And do we now get into a pause of that kind of spending because now people are really looking at the fact that revenues aren't coming back yet and I really need to watch my expense side? So I'm a little concerned that the revenue growth that everybody was anticipating in a linear fashion for the tech sector may have some bumps in the road. And it is a very crowded trade, but it's still one of the few places that you can see sort of consistent growth going forward.
Is it still too expensive, even with the sell-off we saw last week? I'm looking at a forward PE multiple on the NASDAQ Composite, 37.4. Are they still too lofty in terms of valuation to really make a case to buy or add it to your portfolio here?
I think the very difficult thing is that I would have said a year ago that they looked expensive, and all they've done is gotten more expensive. And I think that with interest rates sitting down around zero, our framework for what expensive used to be, if you've been in the business for long enough, it looks very expensive to most of us now. But in the end, we are going to be in a very low interest rate environment for a long time. So people are going to be willing to pay for growth. You can't get income out of fixed income right now. So you're looking for capital appreciation on the equity side. And so you're looking for the places where you're going to see that. And what people are willing to pay for is some consistent top line growth. And that's very difficult to find outside of the tech sector.
Sarah, what can I read into the tech story from what is happening with the TikTok transaction? It is an incredibly messy piece of M&A. I'm not even sure it is M&A. It could just be a licensing deal. But what it tells me is that the relationship between China tech and US tech is going to become more and more fraught and potentially is likely to splinter. Do you want to own tech in that kind of environment? Are the political risks priced correctly in this space?
Oh, I would argue that a lot of the risks are not priced correctly in this space, but that's a challenge that I don't think I'm going to be the one to uncover. I think that even if you had more decoupling on the China-U.S. technology side, it doesn't mean that you're not going to grow tech. And I think that the biggest problem right now with TikTok is about the data and about who owns that data and how much data is being moved around. And quite honestly, you know, if people asked you for the data that they just take off your phone, most people would probably say no. So I think that the absence of any kind of privacy issues that when it comes to Chinese tech relative to U.S. tech is part of the reason that you're having this big discussion about TikTok. And I don't really understand what it is either, because it doesn't sound like it's a sale. It sounds more like it's a data protection situation, and I'm not quite sure how that's going to work out. I know that there's been a lot of discussion about regulatory issues with tech. We've all seen that. I mean, it does make you wary. But on the other hand, again, the growth is there, and it's very hard to see how you could even decouple some of these businesses from one another, even if you start to hear more regulatory talk about whether or not, you know, they're too big. They are too big in the general scheme of things.
Yeah, Sarah, you keep mentioning that's where the growth is, and I feel like a lot of the conversation about U.S. relative to the rest of the world is based largely on tech, because the tech exposure here is something you can't get in places like Europe, even if their virus recovery maybe is looking a little bit more stable than the U.S. How do you think about the U.S. value proposition versus everything else in the world right now?
Generally speaking, the U.S. tends to have higher valuations than at least the European markets. Sometimes some of the Japanese and other markets get the valuations changed a little bit. I think that the regulatory structure in Europe is a little bit different than in the U.S. And I think that the biggest tech companies in the U.S., obviously not only are they growing faster, but the bigger they get from a market cap perspective, the more index dominant they become. And since we've also had a big move to passive investing, there is a virtual upcycle there where as more money is put into the market, it is going to the bigger cap stocks because they are dominating their indices. So there are outside U.S. big stock companies. I mean, you've got Taiwan Semiconductor. You've got a ton of different stocks outside of the U.S. that make equipment for this space and also who are in this space. But the biggest brand name for tech tends to be U.S.-dominated companies that are now, global in scale. Amazon is global in scale. Google is global in scale. These are all global companies now.